Everyone is talking about the next big thing. Buy AI stocks or get into crypto or Swiss real estate will never go down. So actually the best investment is not a product, it's not a trend, and it's definitely not what most people think. And in today's video, we will review what makes a good investment and how to identify the best investment for you in 2026. Hey, it's Charlene. This is the channel where I share my 10 years banking and investing experience with you all for free. Like and subscribe for more. So let me tell you what I hear all the time from my friends, clients, students as well. So Charlene, what ETF should I buy? Or is it a good time to get into Bitcoin? Or should I invest in SMI? Is AI stocks are getting too expensive right now? Should I still get in? So many questions are like this. I totally get it. So we're trained to think that smart investing is equal to choosing the right product. Pick the winner, time the market, and outperform. So here is the truth. Even if you pick the best performing stock in 2023 or 24, and if you sold it, for example, at the wrong time, you still lose money. And if you bought something average, if you had the right strategy, you probably came out strong and ahead. So let me flip the question back to you. Are you trying to get rich fast, or do you want freedom for life? So if you choose the first one and just want to earn some quick money like a little lottery, maybe you already want to swipe left. You know, this moment is not for you. Because the answer to that question changes everything. Okay, now the question is, what makes a good investment in Switzerland anyway? And before we review what actually is the best investment, you need to know how to judge a good investment. So Switzerland is a wealthy, high-cost, highly regulated country, so your investment options come with some unique factors. One, high stability sometimes means lower returns. So for example, the Swiss system is stable, but also conservative. For example, Pillar 3A funds, heavily regulated, right? And tax saving, but with contribution limit, for example. And banks accounts, basically zero return. And real estate, expensive and huge down payment compared with elsewhere, and already scared a lot of people away. So if you're just looking for safety, great, but safety will not make you wealthy. And second thing you need to consider is like actually you have access to global markets. Most people in Switzerland don't realize this. You're earning in Swiss francs, but you can invest globally. So for example, US stocks, European bonds, global ETFs, real estate funds, cryptocurrency, Asian investment, etc. So you need to know how to access them without paying crazy fees. And the third point you need to consider is taxes and legal limits. It really matters. And this is what a lot of people ignored. So what sounds great on paper may not be worth it after Swiss taxes, wealth tax, or contribution limits. So you need to see the net return, not just the chart. So a good investment in Switzerland is not just something with high returns. It is something that matches your timeline, tax efficient, fits inside the Swiss legal system, and helps you build long-term real freedom. I hear this all the time. A lot of people, they keep asking me, why not just buy an ETF and buy and hold? Is it a real strategy? So let me tell you a story. Okay, since 10 years, I've been getting the same question from friends, from clients, from students, all the time. Charlene, can I just buy an ETF and hold it forever? Like for example, VOO or VT, those famous ones. Honestly, it's not terrible advice, but here is what people don't tell you. So an ETF isn't a plan. So ETF is the tool. So let me give you an example. So imagine you're a young professional in Zurich, you want to buy an apartment in 5 years, for example. And now compare that to someone who's 55 planning to retire comfortably in 10 years. And compare that with a family with a 1-year-old kid saving to send their kid to a top university in 15 years. Or a 20-year-old dreaming of becoming a digital nomad as a freelancer, working from Bali with complete time and location freedom. So should all of them just buy VOO and chill? So of course not, right? So it is not a one-size-fits-all strategy. And it's actually really dangerous to trade it that way. So for example, what's the problem with something like VOO? So let me be clear. I'm not saying VOO, for example, these kind of ETF is bad. I personally hold it and I even make a video, breaking it down. You can check it later. But here is what you need to know. One is US focus, right? So it means if the US underperforms, so do you. So not too much global diversification. And secondly, is USD denominated, which means, for example, as a Swiss-based investor, you are exposed to currency risk. And if the dollar weakens against the franc, your returns shrink. And third is the pure equity ETF. That means high short-term volatility. So it's great if you're investing for example, 10, 20, 30 years, but it's not great if you need the money in 3 years, for example. So definitely know the best investment in 2026 and beyond isn't just buy VOO. And you really need to know, do you even need it? And if yes, when? And how much? And what for? Because again, an ETF is just a tool, but only a strategy makes it work. So what is the best investment for you in 2026? And here is my honest answer. So the best investment is the strategy that fits your life, not a fund, not a stock, not the latest tech trend. And it should be a full strategy that is designed around your goals, your income, your risk level, and your time horizon. And here is actually what I will do if I were you. So if I were you, a busy professional living in Switzerland without a finance degree, without too much investment experience, earning a good salary with some savings sitting there doing nothing, if I were you, I would do this. And here is the exact exercise I would do. And by the way, just to be transparent with you, this is the same framework I teach inside my paid signature, the one and only program, Vision Investment Academy. But let me give you a quick version just right here to help you get started. And maybe you want to grab a notebook and a pencil. Yeah, just, let's map that out together. So step number 1. Write down your life goals. So start by writing down your short-term, mid-term, and long-term goals. So for example, in 3 years, I want to keep my current lifestyle. No burnout and travel once a year with my family, for example. And in 7 years, I want to buy a 3.5-room apartment near Zurich. And in 15 years, I want to build a 1.5 million Swiss franc investment portfolio, quit corporate, and start my own business. So be specific, make it personal. And then next to each goal, write down how much money you will realistically need to make this happen. And after I have this table, then I want to check if these goals are actually realistic. So now you look at the numbers and ask yourself, are these goals actually, doable, manageable based on what I earn, what I save, and invest? So because here's the deal. For example, if you make 2,000, for example, per month and have 10K in your savings account and you're aiming for a 2 million portfolio in 5 years, let's just be honest, no investment will save you. And if someone tells you otherwise, it's probably a scam. I always joke with my girlfriends, for example, in their mid to late 30s are still single and they're still dreaming of a man, for example, who is successful, rich, funny, has 6-packs, abs, and available to them 24/7. So it's just not, it doesn't exist. It's more like, let's just be realistic. So investing works the same way. You have to be goal-based and also realistic. So there's actually, a series of, for example, calculation and numbers to help you, decide if these goals are realistic for you or not. And now step number 2. Learn what your investment options are. So once your goals are clear, you need to explore the actual investment tools available. And here, I don't just mean buy a few ETFs here and there. There's a wide universe out there. For example, stocks and ETFs, bonds, real estate, Pillar 3A and second pillar buy-ins, vested benefits, cash equivalent, alternative assets, for example, like REITs and even cryptocurrency. So each of these exists for a reason, my friends. And they may not work for person A's long-term plan, but they might be exactly right for your midterm goal, for example. And within stocks, you also have US stocks, European stocks, Asian stocks, right? And you have dividend-paying stocks, growth-oriented stocks. So what I want you to say is that don't just blindly follow a YouTube guru, for example, who says, okay, do this and you will be rich. Or a so-called finance coach just shouting at you, just follow my own investment strategy. No. So honestly, that's really lazy advice. Investing is really personal and your strategy needs to reflect your life. And step number 3, you build a strategy that actually fits you. So now is where all comes together. So you got your goals, right? You got your short-term, mid-term, long-term goals, realistic goals. And then you review your investment options. And now you connect the dots. Which tool help you reach your 3 years goal and which one support your 15 years vision, and what do you need to automate monthly, and what is your risk level, and how much cash do you want to keep for peace of mind. So this is your strategy, not random buys, not copying someone on TikTok or on YouTube. And this is your personal investment roadmap. And once that's clear, then step number 4, you implement. So you open the right accounts, you automate, you invest consistently, and you review once and twice a year. That's it. No market timing, no panic selling. Just a clear system that works for your goals. And once your strategy is in place and running, and there's one more thing, step number 5, optimizing. So that means minimizing hidden fees, choosing tax-efficient accounts, rebalancing when needed, and keeping your plan clean and low cost. So for example, your goals may change. For example, last year you don't want to have a kid, and this year you find your true love and you want to build a family. So your goals change, and your investment strategy should change accordingly as well. So you want to optimize it. So what's the best investment in 2026? It's not a stock, it's not a coin, it's not a trend. It is really to have a strategy, a simple goal-based strategy that helps you build wealth on your own term. So if you believe what I just shared makes sense to you, and if you want help with that, you can actually check my signature program, Vision Investment Academy, where I walk you through everything you need step by step in under 10 hours. It's everything I wish I had when I started investing. But if you're motivated, self-disciplined, and you love researching things on your own, you can 100%, just take this framework and figure it out by yourself. And honestly, me personally, I believe everything in life is self-learnable. For example, you're probably using ChatGPT, watching YouTube videos, maybe even reading finance blogs or books. But the real question is do you want to spend hundreds of hours trying to piece it all together, testing, guessing, and second guessing? Or would you rather save time and spend the time doing something that you really care about, like quality time with your friends and families, right? And if you love this framework but still have questions about your own situation, maybe you're not too sure how it fits your specific goals or challenges, you can actually book a quick call with me or someone from my team. We offer actually a few clarity call slots each month. You can talk through your personal situation, ask your question, and see if you're ready to start investing seriously. So you can actually head over to the Vision Investment Academy page and schedule your spot. The link is in the video description area, so don't wait too long. We keep it limited, so we give everyone the full attention. So go ahead and check it out, and I will see you in the next video.